Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Inflation is now the top trending search on Google. This comes as no surprise to many of you, considering that commodity prices, which act as a leading indicator of global inflation, they are surging across the board, from the metals to the energies to the agricultural markets. Earlier on this month, the US Bureau of Labor Statistics, they released inflationary numbers for September that showed that US consumer price inflation had the largest increase since July of 2008. Just like the United States, every economy around the world right now is experiencing a sharp and uncontrollable surge in inflation. Consumer price inflation in Canada, that rose at its fastest rate in 18 years in September. That's the highest level since February of 2003. Elsewhere in the UK, inflation hit 4% last month. That's the largest jump since 1997. Meanwhile, Eurozone inflation, that hit a 13-year high. Signs of inflation are growing more obvious day by day, from soaring energy bills to food and general commodity prices, shortages of products and labour. That trend shows no signs of slowing down anytime soon. The only solution that world central bankers have to rising inflation is tapering and rate hikes. In the words of Goldman Sachs, this plan is already doomed to fail. Whilst this may make policymakers look busy and active trying to combat inflation, in reality, tapering and rate hikes, that will solve zero of the actual problems to alleviate the current drivers of inflation, because the underlying driving factors behind the current surge in inflation is being driven by supply chain issues, droughts, port congestion, supply outpacing demand, soaring shipping costs, the global energy crisis, and labour shortages. So basically, tapering and rate hikes, that will hardly solve these dominant problems. Historically, central banks have always been wrong at one point or another when it comes to tackling inflation. There is every possibility that history could be about to repeat itself. Looking ahead, inflation will continue to dominate the headlines and drive markets going into next week. The biggest market moving events that traders will be paying close attention to will include the highly anticipated interest rate decision from the European Central Bank, third quarter GDP numbers, as well as the Fed's preferred measure of inflation, the core PCE price index. As we enter an era of change and uncertainty, the importance of having an essential income-generating skill like trading becomes a must-have necessity. If you want to actually reach your long-term financial goals in these rapidly changing markets, you can't just stockpile cash in a savings account, because rapidly surging inflation, that will erode your wealth and purchasing power. Instead, you need to make money work hard for you as you've worked hard for that money. Banks, hedge funds, they are making multi-billions capitalizing on the super cycle, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures so far this year, and we still have another 3 months left to go. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you still want to make 2021 your best year yet, you still have time if you take action now. We're seeing one of the greatest wealth transfers ever in history. The time to start making money in this commodity super cycle is right now. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So firstly, crude oil prices over the month of October so far, they are up just shy of 12%. In fact, they surged again 2% to the upside just on Friday. Silver prices over the month of October, they're also up over 10% and a 4% increase in the last week. Copper, as you know, we've continued to capitalize on this market over the last month. We banked over 1,500 points profit on this market over 5 trades. So of course, for every 1 lot contract that you would be trading, that's $15,000 of profit. For every 10 lot contract that you would be trading, that's $150,000 of profit. We talked you through that trade in a lot of detail last week. Copper prices, they still remain up over 9.6% over the month of October. Platinum prices, we still have a position on platinum where we're currently up 950 points on this trade. Platinum prices, they still remain up 8.7% for this month. Natural gas prices as well, we've capitalized on the recent dip over the last week. We talked you through this opportunity in a lot of detail on the previous week ahead commodity report. We have 2 positions on natural gas. We're built in nice and low here over the last week. Both of those trades are in profit into the close as natural gas prices, they surged 2.5%. Palladium as well, we continue to maintain 2 positions on this market. Palladium so far over the month of October is also up over 6%. And of course, gold here as well. We still maintain our position from 1,727 US dollars per ounce. Gold rose just under 0.5% on Friday. It's up over 2% in October and 1.2% in the last week. As we mentioned many times before, gold, platinum, silver, they all tend to do very well over the month of October. You really wanted to capitalize at the beginning of the month of the usual end of quarter outflows that you get at the end of September in order to use that opportunity to build in at the start of October as you head into a new quarter. So as you can see, we're now coming towards the final week of October, and October yet again has been a very strong month for the precious metals here. What I would look out for as we go into next week as it relates to these markets is we have the European Central Bank announcement that is coming up on Thursday. So typically what you tend to see is metals perform well in the lead up to a European Central Bank announcement, but I would watch out again for potential traps on that news items and then sell off as we get into the month of November, especially once we're past non-farm payrolls. The data is very strong on gold, silver, platinum to pull back as we go into the month of November. This is where the dollar can also pick up a lot of momentum. So again, I am expecting consolidation to upside in the lead up to the European Central Bank announcement. Silver also very strong mover over the last week. We've broken all the way out to the highest level since the beginning of September. Again, I would keep an eye on this in the lead up to the European Central Bank announcement. We may well see more strength into that news item, but silver typically pulls back as you go into the month of November. Copper and palladium tend to perform very well in the month of November. So unlike gold and silver, which usually pull back over that month, copper and palladium do tend to be very strong performers. So the lower that copper does get here over the next few days and between now and the end of the month, I would be very interested in adding further positions at lower prices on copper. That is also very relevant for palladium too. I think this would be a gift if we did see palladium break back down to the 1900 zone. Previously at the end of September, when palladium prices, they broke down to $1,830 per ounce. They then broke out and surged over 3,500 points to the upside, which was a massive opportunity that we capitalized on at the Gold and Silver Club over 3 trades, banking over 4,500 points profit. So if we do roll over, come back down towards the recent swing lows, I would be very interested in adding further exposure to these markets. Now moving over to natural gas, this market has again provided a fantastic opportunity over the last week to buy in much lower. We actually gapped lower at the beginning of the week. We broke all the way back down to the 4.8 level. This was again really great opportunity to buy in after the recent breakout we've seen to 7-year highs. Natural gas in the short term got overheated, and then as a result we've of course pulled back. It's had a 10% pullback. We have to remember natural gas prices just at the beginning of October, end of September, they were trading at 7-year highs, so a pullback and profit taking was needed. But now we're building that higher momentum again, and typically natural gas performs extremely well into the month of November. So I would absolutely keep an eye on this market. With platinum, hedge funds and money managers have significantly increased their net longs in the last week on this market. It's also been the same with silver as well. And of course, this is indicative of the price action we've seen here as well, where silver prices, they're up 10% for the month, and platinum, of course, is up 8.7 for the month as well. So as we go into next week, again, Thursday's European Central Bank announcement is the major news item that I would be looking out for here. Crude oil right now now continues to be on a tear to the upside. Again, it's up 11.5% so far in the month of October. We're now breaking out again from 3-year highs. This is one of the greatest examples of the impact of inflation in the commodity space at the moment. As you know, commodity markets, they do not move up in a straight line. They zigzag, but this presents you, a savvy trader, with back-to-back trading opportunities. One of the biggest obstacles that holds 95% of retail traders back from achieving their desired success, it's not having access to professional strategies and institutional level data and market intelligence to make confident decisions with accuracy in these highly profitable markets. If you want to thrive and not just survive in these highly macro-driven markets, you need to adapt and utilize a professional, research-driven approach. As traders, we have superior advantage to capitalize on every lucrative move in the market, no matter if the markets go up, down, or sideways. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you will end up wasting lots of time, money, and effort. You won't have any results to show for all of your hard work. If you want to thrive, not just survive in these highly macro-driven markets, then you need to adapt and utilize a professional, research-driven approach. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators, that will not work. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets. We still have another 3 months left to go of this year. Never underestimate what you can achieve in the next 3 months with the right guidance and mentorship. Time is the most valuable commodity that you have. Make sure that you don't waste it. If you want to maximize your money-making potential and thrive, not just survive, you need to adapt your strategy to the current market conditions. This is where you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach in the markets. You want to understand and learn the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, the intermarket correlations, the ratios in the market, sentiment, capital flows are very important. This will help you with a lot of your timing, entering and exiting into commodities. Alongside that, learn and understand key areas of liquidity, alongside the macroeconomics, the fundamentals, the news items also, which will have the biggest impact, creating those fast impulse moves for commodities where you can capitalize on those moves very quickly. And then of course marry that up with how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional, research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.